Jurisdictions across the United States require public officials to secure surety bonds to guarantee they will act faithfully in accordance with defined duties. Hi, I'm Tyson Conley, Director of Commercial Underwriting at Merchants Bonding Company. Today we'll discuss public official bonds. What are public official bonds? Public official bonds are needed by various elected and/or appointed officials to guarantee the faithful performance of their job duties. Any public official handling financial matters or money and making decisions for a public entity may require bonds. Public officials who need to be bonded can range from Parks and Wildlife Department positions, state treasurers, or school tax assessors. What is the required bond amount? Specific bond requirements are determined by local obligees. The obligees can range from cities, counties, and even state entities. Agents will often have the authority to issue public official bonds up to $50,000 without seeking pre-approval from their respective underwriter. How are public official bonds underwritten? Generally, we would request a completed signed application for all public official bonds. This would include page 2, the public official section of our application. If the bond amount is $50,000 or less, it oftentimes can be issued instantly online. Over $50,000, we often require a clean personal credit report in addition to the signed application. And over $100,000, oftentimes a personal financial statement will be required of the applicant. On page 2 of the commercial bond application, we would like to see good controls in place. We pay close attention to whether the applicant signs checks, handles money, and if counter signatures are required. We'll also ask when their last audit was performed and if it was done by someone other than the applicant themselves. What is the duration for public official bonds? Many public official bonds must be secured annually. They are typically needed for the duration of the official's public service. They can also be in 2 or 4 year term increments, depending on their elected or appointed position. How much will public official bonds cost? Premium on public official bonds will vary by obligee. The more money our applicant is responsible for, oftentimes the higher the premium and even the higher the risk. What happens if a claim is filed? All public official bonds work in the same basic way. If the bond's terms and conditions are broken, a claim can be made against the bond for compensation. The surety will then pay out the claim if warranted, but the bondholder is responsible for paying back the surety in full. How are bonds issued? Those in need of a bond should get in touch with their insurance agent to help walk them through the process. The agent will then work with merchants to issue the bond. Please contact Merchants Bonding Company for agent recommendations in your area. Thanks for watching. I hope I've cleared up the basic concepts of public official bonds. Please contact Merchants Bonding Company with any further questions.